Welcome to this week's Property Insider chat, where Dr. Andrew Wilson and I discuss the surprising resilience of Australia's economy, starting with the latest labour force data showing unemployment has remained steady at 4.1%. And despite global uncertainty, our job market continues to hold firm, with lots of jobs still being created. And while the fundamentals are strong, there's a fascinating divergence at play. On the one hand, retail sales continue to edge upwards, suggesting consumer confidence, consumer sentiment still solid, yet the share market's taken a hit, spooked by the sensational media outlets. So, to put some context to all this and what it means to property, including the latest auction results, we're going to discuss all those. But if you want to keep up to date on what's happening in our economy and our housing markets, before we get going, please just subscribe to this YouTube channel and click the little bell icon so that we can keep you updated each time a new show comes out. We're experiencing interesting times in the world, with share markets tumbling, consumer confidence spluttering, talk about countries falling into recession, and the thought that central banks are going to need to significantly drop interest rates to stimulate economies. Now, obviously, it's still early days, yet over the last week, a number of economic indicators have been released, which our Reserve Bank is going to take into consideration when making its next interest rate decision in May. So to discuss these, I'm looking forward to my weekly Property Insider chat with Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market. Hello, Andrew.
Yes, hello, Michael. I hope you've had a pleasant Easter so far, and everybody.
It was good, and a few too many Easter eggs and a bit more weight put on.
Yeah, it's the old story, isn't it? But it's an interesting time of the year, autumn, of course, and it's a good break. And we've got another one coming up next weekend with
another long weekend,
because we have late Easter this year. But interesting times as usual. It's as you mentioned, there's been a lot of speculation. Should we be surprised? A lot of doom and gloom about the outlook for the Australian and the international economy on the back of these changes to trade policy initiated through the Trump administration. It's interesting that all the headlines, well, just about everyone I've read, are about negative connotations. So it's all speculation because nothing's happened yet. The policies haven't even been, consolidated. So we don't know what's happening. And yet we have a raft of shock horror headlines everywhere, even in sort of trade partners such as Australia, which have a very positive relationship with the US in terms of the trade balance. But yes, we shouldn't be surprised at that. It's a bit like, again, any issue that comes along that has a lot of uncertainty, the media get hold of it and try to scare the hell out of us. And they certainly scared the hell out of the stock market. And again, it's buyer beware, I think, in terms of latching on to some of the predictions. And I think, as I was going to say, I think it's interesting. All the predictions are doom and gloom, Michael.
But there was one good bit of news, Andrew, that iPhones are not going to go up in price because Trump didn't tariff iPhones and electronic phones and smartphones, and it's my year to upgrade my iPhone, so that's good news.
Yeah, but the point is that it's all doom and gloom regardless.
I know.
The tariffs will be a positive. They're all going to be a negative, and it's going to be a recession, and interest rates have to be slashed. And when you look at if you're silly enough to read beyond the headline, which of course is the clickbait, you see that there's all could be, should be, would be, maybe. It's all speculation. There's nobody's definitively saying this. It's just to draw you into clicking on that headline. And when you do read the so-called expert's point of view, it's all highly speculative. But the point is, it's all speculative on the negative side of the argument. So that's the world we live in now, Michael, and we shouldn't be surprised at that, given all the silly negative headlines we've had over the journey in relation to the outlook for housing, for the housing markets, So I feel sorry for those in a way that took the bait and sold their shares a couple of weeks ago. And we'll look at just how the share market responded to all those gloomy headlines and horror outcome potential. And that still hasn't recovered the share market, Michael, completely, even though we still have all this flux in terms of the actual policies coming out of the US government. But thankfully, we have asset classes that have more robust results, and that, of course, is the housing market.
Of course it is, and it's times like this that I'm very comfortable that the majority of my assets are in residential real estate. Now, having said that, there's been some good news on the Australian front. I know last week we were talking about you waiting with bated breath for the jobless figures. Obviously, what's happening to our economy shows up in a number of different ways, and there's no doubt that some people are doing it hard with the cost of living, and others, I know there's always comments on these shows saying, hey, you guys have got it wrong, the economy is not doing well. When you measure the economy in how many people are employed, how many jobs are being created, who's spending, there's some good news at the moment, isn't there?
I can't find the bad news, Michael, in terms of data. And, if you're not relying on data, well, what can you do? Your first point of call is to look at data and then convert it into commentary based on the knowledge outcomes that produces, the information. But we've got a Reserve Bank meeting coming up shortly, a lot of talk that we'll get another interest rate cut. The Reserve Bank is a law to themselves, and it's been a little weird having an interest rate cut with such a strong economy. So that means perhaps we might get another one, even though, all the economic indicators remain positive. Now, having said that, we did discuss last month's labour market data, which is a very important indicator of economic health. It did start to show some signs of perhaps a weakening what's been a remarkably strong labour market over the past few years. We did have a significant rise in the number of unemployed and a significant fall in the number of people, or number of jobs created. And this was unusual because the trend has been for quite some time now of easing the number of unemployed, but particularly surging numbers of jobs. So perhaps we thought maybe this is the first sign of some weakening in the economy. It has been up for a long time. And that would, of course, add to the argument that perhaps we need some stimulation in terms of lower interest rates. So that was the February data. We've just had the March data released. So we sort of wait to see if there was a consolidation of that weaker trend that was reported over February, Michael. But no, we've had another strong result. The unemployment rate was steady at 4.1%. That is a very low unemployment rate. Historically, jobs were up, not as much as they have been in some previous months, but still jobs increased by 32,000. And the unemployed numbers were up slightly by 3,000. So certainly a better result compared to February. Jobs are up now 2.2% over the year. The number of unemployed is up 7.1%. That's why we've seen our unemployment rates rise from the mid-threes now to the low fours. The participation rate, which has been tracking at record levels now for some time, remains steady at 66.8%. Again, Western Australia was the strongest state or had the lowest unemployment rate at 3.6%. So lower rates, Michael, will only stimulate the labour market because it offers people have more money in their pockets. They'll spend perhaps that money and that will create more demand in the economy. But when we look at that long-term trend in unemployed, 4.1% now, it really is tracking at the levels we see during very strong economic periods, even when we go back to the early noughties, mid-noughties, where we had that massive mining boom in Australia. Unemployment rates were around about the same level. So in terms of the history of our labour market, we're still very strong at that 4.1% unemployment rate, which has been steady around that result for a few months now. Most of the states have recorded higher unemployment rates over March compared to March last year. The one exception was Queensland, where the unemployment rate over March this year was 3.9% compared to 4.1% the other year, the same March last year. But, these numbers are quite low and still in the fours, and there's nothing really to get too excited about when we look at the state breakdowns. And even jobs growth has been quite positive. New South Wales has been the underperformer with annual jobs growth up by 1.7%, whereas South Australia is the leader over the year to March, up by 2.99% for jobs growth, Michael. So I think some pretty good results there. Again, nothing to get too excited about in terms of a change to the trend, which we maybe saw early signs of last month, but this month is sort of back to normal. Not quite as strong as we've seen, but certainly, a positive result, inarguably a positive result for the Australian, labour market and by extension, the economy, and nothing to really, I would suggest make it a stronger decision to cut rates by the Reserve Bank.
Well, we talk about the rising cost of living and people doing it tough, and there's no doubt that a lot of people are. But we also keep track of the Australian Bureau of Statistics retail sales figures, giving an indication of how things are going. And the latest ones, looking back at February, were still very strong.
Yeah, again, another positive result from retail sales. We can only rely on the data as it comes out and to compare that with, the historical trends, Michael. But retail sales were again 0.2% higher over February compared to January. Of course, these are seasonally adjusted data, up by 3.6% over the year, which is a very strong result. And that followed a 0.3% increase over January. And the annual growth still remains robust, despite us having lower migration and higher inflation, because this is the value of retail sales. So obviously, with higher inflation, that tends to inflate the retail sales data. And we're well ahead still of where we were in the post-COVID sales boom. And of course, once again, Michael, lower interest rates, and maybe that's the story of the February data, will help to fuel retail spending because people will have more money in their pockets, and looks like perhaps that's part of it. And again, it just reflects positive consumer sentiment. And you can't argue with the data. And when we look at the trends, it's clearly remained on an upward trajectory in the post-COVID era, even despite higher interest rates, Michael. And when we look at the annual growth results, they've certainly accelerated over the past year, growth over the year in retail sales. So still plenty of positives there for the Australian economy, falling on what we've said about the labour market. So people are still spending, Michael, and we shouldn't be surprised given lower interest rates.
Well, the share market's an indication, or the price of shares is an indication of where people think the economy is going, also because they're wondering about how their companies they invest in, the companies of this world that make things and sell things to us and provide services, how they're going to fare. Now, clearly, when Trump's tariffs were first announced, there was a big scare that started in the United States and rippled right around the world. Share markets have dropped, as you said. They've crept up a little bit, but they're still very concerned, aren't they?
Well, they are, Michael. And this is the point that the share markets just, reflect those clickbait headlines of doom and gloom. And it's something that investors should be, careful to be wary of, because the old story that the US sneezes and we catch a cold. And our share market's been a terrible underperformer over the past 20 years. And again, we reflect that with another quite concerning result over the period of the last couple of weeks when we've had those headlines, and it was down sharply. And we've already reported today that despite unequivocally strong signs of a positive economy, it's a strong labour market. Of course, we know that house and unit prices are rising again, retail sales are higher, rental markets have been tightening, rents are still high, sharply lower inflation, lower interest, and yet all those positives have really meant nothing to those that are putting their money in the share market. And we've got a chart here, Michael, that shows the shakeout that came from those scaremongering headlines following the Trump announcements around about a month ago. And the share market did recover, as most share markets did, when the news in regard to the tariffs became less clear. But it's still down 9.1%, Michael, compared to its peak this year so far. So even though it's bounced back, it's been a bit of what you call a dead cat bounce, and not really going back to where it started from. And again, this just reinforces the nature, perhaps even more so these days, which is perhaps a desperate media just searching for headlines and attention, and the equities market responding almost in a hysterical fashion to those headlines. So, of course,
well, the world's most famous investor, probably one of the best investors of all times, Warren Buffett, wisely said, be fearful when others are greedy and be greedy when others are fearful. That's probably easy to say and do when the market's booming. I guess share investors are having difficulty rationalising that when the market's slumping, Andrew.
It is. And hey, what about those superannuation accounts? We have compulsory super here, and they're all directed into the share market. So, don't have a look at your superannuation balance anytime soon, because you might be in for a bit of a shock. But as I said, it's there's a lot of question marks over this. But again, we will be releasing next week, Michael, our latest house and unit price report for April, as usual. First in with the data. And just to be a little bit cheeky, forward indications are that we're going to have another very good month in April in terms of rising prices. And we shouldn't be surprised because interest rates are falling. And that's usually a cause and effect, and maybe another interest rate cut in the not too distant future. So some good positive news on another asset class there, which we can't really say in terms of the stock market.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Well, it's been an interesting couple of weeks for the housing markets with Easter, with Anzac Day coming up, with the federal election. So there were really very few auctions over the weekend, but I know that my housing market doesn't just report Saturday's auctions, but all the auctions that have occurred over the previous week. So let's look at what happened over the last 7 days since we last reported.
Yeah, there were few auctions, Michael, over the Easter break. We had big auctions the week before, of course, as people avoided, as agents and owners avoided the clash with the Easter holiday break. We'll have another quiet weekend coming up, or week coming up next week because of the Anzac Day long weekend holiday, Michael. But nonetheless, we did have some auctions coming through. Not a lot of reported auctions, but what we did have, even though we sort of give a disclaimer that with low numbers, these can be a little volatile, the clearance rates, but generally they were higher over the Easter week with fewer numbers, of course, of listings, but that which meant fewer choices for buyers, less competition for sellers, which generally means higher clearance rates. But as I mentioned, we'll have another quiet week with the Anzac holiday long weekend coming up. So let's have a look at some of these preliminary numbers. 325 auctions in Sydney, well down on the week before, a 1.6% clearance rate, pretty similar to where Sydney's been tracking. Melbourne only had a handful of auctions, 146 auctions versus 1363 the week before, and a clearance rate which was its lowest for some time, 60.9%. But again, Michael, most of the market was on holiday, so we take that with a grain of salt. Brisbane numbers also lower, clearance rate around about the same. Adelaide from low numbers, higher clearance rate, 67.5. And Canberra, also low numbers, but a higher clearance rate there. And when we compare it to the same time last year, of course, that was at Easter, so it's not a very valid comparison because Easter is a lot later this year. And the trends showing Sydney's still having a good early part to the year, or I guess it's not the early part of the year. We're moving to the middle of the year, aren't we, Michael?
Wow, that's gone quickly.
But still tracking above 70% in Sydney, and we have noted that Sydney house and unit prices have been rising. No surprise, because that auction market is a very good forward indicator of general results going forward. Melbourne down given that low result over Easter, but has been tracking higher than where it ended last year, and higher than where it was a year ago. Once again, similar to Sydney, Melbourne house prices and unit prices have certainly looked like reviving this year modestly. Brisbane, same old in Brisbane going forward with the latest trend. And Adelaide, certainly lower than a year ago, but still positive results for sellers generally in Adelaide. And Canberra, also probably a bit of the same old in Canberra with high 50s and low 60s. Normally on a full weekend, Michael, we have the Capital City Snapshot results published at PM on my LinkedIn site, Dr. Andrew Wilson at LinkedIn, and a full national report, which we didn't have this week because of lack of numbers, is published. Michael publishes it through his sites on Sunday. So look out for that. And here's a link to last week's national report, if those that missed it, but that's where you get the link to the weekly national report if you miss it on Michael's sites.
We'll report them next week, but more importantly, we're going to hear My Housing Market's house and apartment price indicators. So you've already given us a hint. There's going to be some good news ahead.
Well, for homeowners, and I'll tell you what's interesting is that Melbourne unit prices have certainly looked like they'll be shifting at the highest rate in some time for the Melbourne market, and houses also up in Melbourne, but quite notably for units. But we've still got some data to come in, of course, over the next 10 days or so, Michael. So let's not get too ahead of ourselves, but the forward indicators are pretty positive. And then, as we've been saying with the auction results, they indicate a market where prices are rising.
We've been talking about Melbourne being undervalued for quite some time on this show. I think the other thing we discussed over the last couple of weeks also is how the stimulation from whichever party eventually ends up in power is going to just keep pushing our housing markets, because there's lots of demand side policies, but very little to push a new supply. I was impressed, at least, that the coalition's policy for helping first home buyers is going to encourage them to buy new properties. That'll increase supply, but it won't do anything for prices.
Yeah, well, the solutions aren't on the demand side, Michael. You don't create more demand. It's like you've got to get people to build houses, and they're builders. That's the solution. It's not on demand. You don't have more or less demand. You just got to have more supply. So I'm not sure that's a supply side solution. And this is why governments struggle, because they're really, particularly national governments, are powerless to change the supply line of housing, because it's something that's controlled by state and local governments, But we are in an election mode at the moment, so we have to put up with these types of questionable, shall I say, policy positions on housing.
Okay, look forward to catching up with you next week, and we'll see what's happened for the month of April. Thank you, Andrew.
Thanks, Michael. Yeah, thank you. Bye.